Hello traders, welcome to Investoo.com's introductory guide to stock indices. In this lesson, we are going to learn the importance of volume when it comes to trading or day trading stock indices. And it doesn't matter what stock indices you're trading, might be the FTSE 100, might be the CAC 40, might be the Nasdaq, might be the S&P 500 or the Nikkei. It always comes down to volume. Now, let's go to the charts and I'm going to show you how important it is. First of all, on the bottom of my chart, you can see that I have a volume indicator. This is a tick volume indicator for the E-mini S&P 500. If you don't have a tick volume indicator for your MT4 platform, you can get it at the MQL5 community or just type tick volume indicator for MT4 on Google and you can download it. Now, uh, if you look closely, and let's draw a line right here. Okay, if you look closely, right here on this choppy market, there is absolutely no volume going on. Okay, you do not want to trade when the volume is not uh, high enough because the market is not going to move and it's going to chop up and down and it's going to be very, very difficult for you to take ticks out of it. Now, if you look closely, what happens next? Let's zoom in on the chart, guys. If you look closely, when let me get rid of this horizontal line on the tick volume indicator, and let's draw a line right here. Okay, what happens when price breaks with this trend line? Well, you get some volume in the market. You can see the volume spike right here. Then when price gets to these highs, there's absolutely no volume in the market. So price is going to be chopping up and down, and there is absolutely no profitability on you taking a position there. When volume comes into the market, what happens? You can see the red bar here. The red volume bar is a sell volume, and uh, price immediately comes crashing down. Okay, now I'm going to show you exactly what I mean when I say that volume is needed when you are looking for a trading opportunity. Okay, not only you have to focus on technicals, but let's assume that you are looking at this area of resistance. Okay, you can see the price tested it here and then it crashed down, then it came up again, and you decide to take a short when this volume bar appears. Okay, now let's put on a horizontal line right where the volume bar appears. When this down volume bar appears, price crashes and makes a lower low. Right there you have an entry, and even though price chops a little bit, the negative volume or the sell volume comes into the market and gives you a nice 21 point profit out of your trade. Okay, then again price starts to chop, and here you don't want to be taking any trades. And if we go to the most recent price action on the E-mini S&P 500, you can see what happens. Okay, we were actually chopping down, and right here, let me put on a vertical line. This is where the volume appears. Okay, even though it's just one bar and then price starts to chop, um, this is a very important 3.6 point bar. And of course, you are not going to be trading volume blindly. What you are going to do is look at your technicals. And for example, if you look at the daily chart on the mini S&P 500, you can see right here we are at a very, very strong area of resistance. So maybe you don't want to be trading the long side of it until we break through. Now let's go back and let's look at the Nasdaq. The Nasdaq is very interesting. Look at how beautiful this volume works. We are chopping in the pre-market action right here, and then we have a nice down volume bar or a sell volume, and what happens? Well, the Nasdaq drops all the way down here. So volume is very important for your trading because it will tell you what institutions are doing, what big money is doing, and it will tell you what side of the market you want to trade.